Welcome to BBC Your Voice. It is day 10 of the Iran war, and we're going to spend the next half an hour answering your questions about the energy, oil, prices, the multiple economic impacts this war is having, impacts that are only spiralling. Well, with me here in the studio is our Deputy Economics Editor, Dharshini David. Barbara Plett Usher is in Doha for us, and Bill Farren-Price also joins us. He leads the gas programme at the Oxford Institute for Energy Studies. So let's get cracking. To Dharshini first of all, and the first question, Dharshini, it is being asked how much of the world's oil actually comes from Iran?
And that is a very good question indeed. It is one of the top 5 producers in the world, one of the biggest, with proven reserves as well. But remember, a lot of the West wasn't buying its oil from Iran. So why have we seen such a big price shock on the markets? Much of that oil was going to the likes of China. And what we're talking about here really is the disruption to the region as a whole. So that Strait of Hormuz, that waterway we've heard so much about over the last week, the fact that traffic is practically at a standstill there means that not much is flowing east, and that is causing problems across the region. If you look at Saudi as well, for example, it has said that it's cutting back on production, which is a bit of a blow to the global market because it can't get the oil away fast enough. So that is the problem at the moment. So really, it's not so much a question of where the oil, how much of the oil comes from Iran, but frankly, what the wider disruption has been.
Bill, let me bring you in because an opening question to you. We're 10 days into this. Where are we when it comes to the price of crude oil?
Well, we've seen crude bounce much higher since the start of this conflict. This morning, though, it was up a big leg, up as high as $118 for Brent futures. It's come down a fair bit since then, probably on the stories around a potential release of strategic stocks by the International Energy Agency. But prices are still very, very elevated. And that's not just oil, it's oil products as well, refined products, and also gas, because a lot of the world's LNG comes from the Gulf.
Barbara, we're seeing the graphic in terms of the price spike there on the screen. Just in the last 48 hours even, tell us a little more about the areas, the oil facilities that have been struck.
So Bahrain today, there was an attack on the largest oil refinery in Bahrain. A fire started. That's been brought under control, but the energy company in Bahrain has announced a force majeure, which means it believes it cannot meet its contractual obligations. You've also had in the past 48 hours several waves of drones targeting the largest oil field, or a very large oil field in Saudi Arabia. These have been intercepted. You also had a strike that set alight fuel tankers at Kuwait's international airport. Now, after that, the fuel storage, at the airport. After that, Kuwait's energy company announced that it was going to begin to cut back production, also announced force majeure. And on Saturday morning, there was an oil tanker hit in the Gulf. This is what the Iranians said. Of course, you had a number of attacks last week as well in Qatar, in Saudi Arabia, and some terminals in the United Arab Emirates where fires started from falling debris.
Dharshini, in terms of the consequences, all of that, it is already being passed on at the pump. So take me through the changes we've seen.
Well, indeed, Matthew, this is interesting because when the start of this all happened, beginning of last week, we were all saying this will take days, weeks to feed through to consumers if this is sustained. What we've seen since then is obviously the oil price going further up, and retailers, and this seems to be a pretty much universal thing, being pretty quick to pass these on. So here in the UK, for example, a big motoring organisation, the RAC, is talking about petrol per litre passing 150p rather, per litre, perhaps in the near future. Diesel going over 160 pence, perhaps even higher. A lot of this depends on how fast and how much further we see oil prices going. But this has been a common theme elsewhere as well. Even in Australia, for example, they've talked about the number of cents going on to a price there and saying, hang on, is this really justified? In the US as well. And let's not forget that in America, gasoline prices, unlike anywhere else, they are the biggest shaper of your thoughts about inflation, right? So this is a hugely politically contentious area. Prices there passing $3 per gallon at the pumps on average.
Yes, that's interesting. Without diving in, it's not that long ago at the State of the Union, Donald Trump was boasting about how low the prices were. I mean, he used a figure that didn't check out in terms of fact checking, but a big jump from the reality even on the ground when he was talking back then. And that's only a few weeks ago.
That is only a few weeks ago. And when I say over $3 per gallon, I mean, some people are watching and think, blimey, that's actually quite cheap compared to my own market. But so let's not forget, it varies hugely across the US even. And this is something that is going to become a feature of coming days. Now, when you talk to all these organisations and you talk to governments and you say, what should be happening? Is this all justified? And, you know, there's reports coming in, by the way, and this is, again, something that's happening around the world, of people on petrol forecourt staff being, you know, abused by customers who say, is this really justified? Are you profiteering? Et cetera, et cetera. And in some markets, including the UK, there has been concern about the size of profit margins. On the other hand, you can see these costs, can't you? And the uncertainty going up and up by the day.
Bill, let me bring you back in because Barbara touched upon it, but just take us through in a bit more detail about how much of the world's oil actually comes through the Strait of Hormuz.
Well, there's easy numbers for that for both LNG and oil. It's about 20% of global supply, which is about 21 million barrels a day of oil, and also a big chunk of LNG, as I said, about 20% of global supply. Now, there isn't really any way to get around the Strait of Hormuz. There are some pipelines that cut it out, but they they're not sufficiently large enough to mitigate that total number. So that's why prices have gone so high. It's the takeaway after the weekend that Iran's not changing its stance, and that the US seems not interested in any sort of off-ramp to this conflict. And I think that's why oil prices have driven so high so quickly.
Barbara, in terms of questions coming into us, Henry asks one that says, why are the containers not crossing through the strait? I think we know, but tell us more detail about the threats, and also adds, who has control of that area?
Well, so the strait is not officially closed, but the Iranians essentially control it, especially because they have been attacking ships that go through. They've attacked a number of them and warned ships not to go through. So most of them aren't. 3 of them have, 1 Saudi, 2 Iranians, but most are not going to take the chance. Although a UK maritime monitor says it looks as if the Iranians are just as much about creating disruption and uncertainty. They're not exclusively trying to sink ships. They're trying to disrupt the trade. The other issue, Matthew, is insurance, because although the ships don't want to risk going through themselves, they can't afford to pay for it because insurers are not going to pay those costs. Now, the United States has said it's going to backstop some of that. It's going to guarantee or provide up to $20 billion of insurance for vessels that want to cross, but that will probably take some time. It has also said it might provide a naval escort, but not right now because it's actually fighting a war right now. So I think the strait is going to be in crisis until the fighting stops or dies down significantly. You've got the closure of this passageway. You've also got production being cut or downsized in the Gulf, and those are the two. It's a perfect storm, really, to have the two of them together.
It is, and most analysts, in terms of those options that Donald Trump has floated, the idea of underwriting insurance and also escorting traffic through there, both are being considered as hugely unlikely and impractical. Dharshini, let me turn to a separate issue in terms of some of the impacts in Asia especially. Take me through that.
Well, it's been fascinating, hasn't it? If you watch the stock markets as they reopened for the week, we saw that slump in markets as that reality that Bill was talking about hit, that there was no going to be a quick solution to all of this. And Asia matters in this particular conversation because you look at that map and you think, where is not just the oil, but the liquid natural gas going to? That normally flows through that waterway. A lot of it is destined for Asia, right? So South Korea, for example, real concerns about whether or not, big manufacturing nation, can they get enough of that stuff. And that in turn is bidding up the price of oil and gas from the rest of the world. And that's why stock markets there have been suffering particularly badly, and indeed markets around the world. This is a global problem, isn't it? When we talk about the global cost of oil and gas, inflation fears have been stoked, and as a result, what you're seeing is borrowing costs going up, bond markets reacting in kind. So that has all sorts of repercussions, not just for governments around the world, because that impacts their borrowing costs, but also for mortgage rates, or people taking out new mortgage deals. So what's happening, in one little corner of the world has this real global impact on consumers up and down in different countries.
Bill, you touched upon the impact on countries and where they get their oil and gas from. Pick up with that thought, because a question here, could countries actually run out of gas and oil? What is the answer to that question?
I think the answer to that question is they could certainly stop being able to afford to buy oil and gas. And that comes to the same thing ultimately. I think that the problem is that when you get a market supply shock like this, prices rise so that they can ration demand. And that's what we're going to see. We saw in the crisis in 2022 when Russia invaded Ukraine and Russian gas supply to Europe started being cut. We saw some countries, particularly South Asian countries, could no longer afford LNG because of the rise in prices. And you'll see something similar happen in oil and gas as well this time around.
Dharshini, a question here from Colin, who says, we have an abundance of oil and gas in the North Sea. So is there any sign of any sort of rethink from the UK government on that in terms of policy?
Well, you're right, Colin, we do have a lot of oil and gas, but the truth is that since, I think it's about the mid-noughties, we've been net importers of oil and gas because we use more than we're actually able to produce. Also, there's different types of grades, right? And some of the forms, like, for example, jet fuel, we have to import because we don't actually produce and refine the right kind of stuff ourselves. So it's a bit of give and take. And if you start cancelling, outgoing contracts, then imagine what the repercussions could be like. So there is a case for saying, well, this is something that perhaps when the government thinks about our future energy policy, we should be thinking about that and how we should deal with it. Being self-sufficient in energy, that's a bigger question. But right now, when we talk about our position in oil and gas, yes, we produce a lot of it goes elsewhere, we get a lot in from overseas. But the good news at the moment, if you're in the UK, it doesn't look like we are facing by any means any kind of crunch on supplies.
Bill, a question that relates to what we saw only yesterday in Iran, especially in Tehran itself, because interrupting oil supplies is one thing, and that has an impact on price. We've discussed that, but targeting infrastructure of oil, that is something that is different and new. We saw those extraordinary explosions and fires in Tehran. If we go down that route and there is more retaliation and more strikes, where does that take us?
I think we're already there. I mean, as Barbara was explaining, I mean, the targeting by Iran of Arab Gulf state energy infrastructure has been happening for days now, and it hasn't been particularly effective. But they could get lucky and do some serious damage. If Iran's infrastructure being attacked seems to be part of the US and Israeli plan. And I can only think that will encourage more widespread spreading of this whole conflict to other neighboring countries. And there is, of course, the danger that, that air routes and pipelines and refineries and terminals all come under fire. Now, that obviously is going to just create more of a supply shock one way or another. And that's just going to continue to build until this conflict starts to ease.
Bill, we're just going to put onto the screen some of those pictures from Tehran because in terms of targeting that infrastructure, it caused huge explosions in the capital. Hopefully those pictures will come in a moment or two. But whilst we wait, Barbara, let me turn to a separate area because we've also seen water desalination targets targeted and Iran has responded. There's massive risks with that as well.
This is a very new and alarming development. Yes, the Iranians say that they were attacked. Their desalination plant was attacked, and the foreign minister said that affected water supply to 30 villages. They believed, or they said, that this attack was launched from a U.S. base in Bahrain, and they responded by attacking a desalination plant in Bahrain, something that the ruler there called unprecedented and inexcusable. And both of them have a point, really, because desalination plants are crucial for this region. It's a desert region. There are hundreds of these plants scattered around the Gulf. Some of them, Kuwait gets 90% of its drinking water from desalination plants. So if they get brought into the mix for attacks, that could have an enormous impact. And you did have this, the Iranian officials saying after the weekend, look, if Israel and the U.S. are going to start attacking our infrastructure, we will broaden our attacks on regional infrastructure. Now, I think they were talking mostly about oil, but if we've seen the desalination plants have been hit, you can imagine that could get bigger as well, and that will be very traumatic, very difficult for the region.
Bill, I've got a question from Keith, and many others have made the point about why prices go up so quickly, but then take quite a long time to come down.
It does, yeah, that does seem to be a bit of an underlying feature. For example, we're still not down to normal gas prices in Europe after the 2022 shock. That seems to be an embedding of inflation that seems to happen in these situations. I think maybe that question also reflects concerns about the fact that at the fuel pump, those prices, retail prices, seem to go up quicker than they come down. I think that's something more to do with how those fuel retail companies, particularly in the UK, are regulated, not so much to do with the underlying price. One thing to say is that, you know, if peace was to break out and there was to be some sort of political breakthrough here, you would see these prices fall very, very, very quickly.
Dharshini, you touched upon it a little earlier, and we've had numerous questions. Janice has sent in a question. Naima has sent in a question. They are talking about and asking the question, isn't oil pre-bought, and aren't there laws against profiteering? So take both of those questions.
Really good questions. You might be wondering why it is you're already seeing prices going up, because when we talk about the price of oil, we're normally talking about the price of contracts for delivery in the future. Not right now. But when you look at the movements in the markets, the vast majority of what you're seeing is actually to do not with someone wanting to physically buy a barrel of oil, but with speculation, right? So why is it that we've seen this impact? It's really interesting, isn't it? Because when you look at what's going on, Matthew, it does seem to be a case that retailers perhaps are thinking, right, if this is the direction of travel, I'm going to have to cover my back. Most of them already have hedging strategies in place. They pre-buy this stuff, they try to smooth out bumps, but this is perhaps an unforeseen spike. Does that mean they're profiteering? Well, we've had various regulators in various countries expressing concern about perhaps the size of profit margins that are happening. And for example, here in the UK, there's been moves afoot not to legislate against putting prices up, but to say, right, we're going to try and increase competition. What does that mean? They've brought in things like, there's a thing called the Fuel Finder, where you're able to go and check to see what petrol prices are in your area and try and find the cheapest retailer. And the thinking seems to be amongst the regulators, well, we'll hope that competition will do the job for us. In Australia, for example, they say, and this has been a question very recently, the market is allowed to set its own price, but there are rules that say you have to be able to explain why you've done what you've done. And if they find that you've fallen foul of that, then you could be in trouble.
You talked about regulators. That takes me neatly to my next question, and it comes from Denise, who says she is 73 and has seen heating oil treble in price just in the 10 days of this war. A lot of concern about heating oil, and actually the regulators on that side of things have issued a statement even in the last few minutes, haven't they?
If you forgive me, I'll read it out because it's probably worth us reading it out. And this is from the Acting Executive Director for Consumer Protection at the CMA, the regulator, who says, we know the situation in the Middle East is putting pressure on heating oil prices, and we recognise that this will worry people who may find it hard to afford these extra costs. Generally, we would expect that customers who have placed orders for heating oil should receive it at the agreed price. Suppliers should be clear what they're charging and the terms must be fair. We won't hesitate to take action if we suspect that consumer or competition law is being broken. Now, that is, not, of course, not the same as saying, right, we're going to go in there and stop your prices going up in the same way. So we're really sorry for the people who've been asking these questions. I know there's a lot of concern out there, particularly in rural areas where they rely on heating oil. But the regulator is saying they're keeping a close eye on it.
Yes, it's recognition that that is a concern. Let me bring Bill back in, because I've seen across the decades we've had various conflicts and spikes in oil prices. A question here about what is the highest that oil prices have hit previously, and how high could they go this time?
Yeah, it's the million-dollar question, really, isn't it? It's so the highest that they've ever gone was in the run-up to the 2008 financial crisis, when we had that sort of commodities boom, and they went up. Brent futures went up to $147 before coming back down again. There's been some research out this morning from Goldman Sachs saying prices could go to 150 or beyond before we start to see the sort of demand destruction that level things out and balance the market. So, but really nobody knows at this point. And also we don't really know. It may not just be contained as a supply problem in the Gulf, but it could actually become a broader regional conflict that could draw in other players like Turkey. So that there are an awful lot of question marks at the moment, and it's very difficult for market players to do anything more than to hedge their bets, hold on to the oil that they've got, and try and get what they can at whatever price they can get it.
Barbara, let me bring you into a tangential question, but could there be a fundamental bottom line for the Gulf states as long as they host US bases in their territory? Does it ultimately get to a choice of doing that, or basically undermining their whole business model?
Well, that's a good question. It's true that the Gulf states have, over the past decades, invested in American military infrastructure, presumably the idea being that American bases buy American protection, and that's being challenged right now. Analysts say it's not realistic to think that that is going to change. They're very bought into it, the Gulf states, and also there's really no viable alternative. The Chinese don't provide that in terms of military defense infrastructure. They're the largest economic partner, but they wouldn't be able to do what the Americans do, neither the Russians. So it's unrealistic to think that that would change, but it is something that the Gulf states are very much preoccupied with, how this is going to affect their economies long term. Obviously, the oil and gas, as we've discussed, but they have also diversified from hydrocarbons by turning themselves into these financial and travel hubs, and that is hugely affected by the perception, by security, and by the perception of insecurity. So how do they deal with that? I mean, at the moment, they are absorbing the attacks. They're calling for an end to them. They're not keen to get involved, to strike back, because they feel, probably correctly, that that will just increase the number of attacks against them, although none of them have ruled it out. They do talk about trying to de-escalate through diplomacy, but at the same time saying there's really not very many avenues for that under the current circumstances. None, it seems. There was an attempt at the weekend which failed. And so I think that they are very much wondering where this is going to go and what their options are going to be if it continues for any length of time.
Bill, a quick final thought, because a lot of searches online about Karg Island. Tell people about how important that is to Iran, and could the Americans try to seize it?
Who knows what the Americans are going to do? I think Karg's very important for the Iranian oil industry. It's the major marine terminal. It's in the northern part of the Gulf, and it's got a huge storage capacity, about 30 million barrels. And given that Iranian exports under normal circumstances are only about 1.5 million barrels a day, that's quite a lot. It is the primary place where they load tankers and send them out to the world. So if the US is threatening some sort of attack, that would immobilize theoretically any Iranian exports. But yeah, I would say probably they're not able to move shipping at the moment in easily anyway, because of the presence of the US fleet and also the threats that they've made will be against other shipping, but it'll be difficult for them to, I would have thought, sell their vessels as well.
Dharshini, a quick final thought, because the EU has warned recently, if this goes on for a long time, a stagflation shock for the world economy.
It's not just the EU. I think, generally speaking, when we look at what's going on in the markets here, if it's sustained, you could see inflation heading not back up to where we were in the Ukraine war, but definitely derailing that fall in inflation we've seen of late.